What is going on, guys? Today I have another very exciting video for you. We're going to be talking about SoFi Technologies and their recent earnings announcement. So we're going to take a look at kind of some of the stuff that has gone on with the stock. The stock saw a huge move up right after earnings, and then it kind of gave back all of its gains. So we're going to talk about why that might be, where SoFi might be going in the future. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. As I mentioned in the intro, SoFi announced their earnings last week, and basically it was Tuesday pre-market, and the stock ran up all the way from $5.36 all the way to $6.44. But from there, the stock really gave back all of its gains. Even on Tuesday, we could see that the stock ran all the way down to around 570, and then on Wednesday, it basically gave back the rest of its gains all the way down here to the $5 range, and then kind of, got back to hovering around that 525 mark. What we could see over the last 6 months is SoFi's really bounced around a 550 is really kind of the range that it's sat around, 550. And then we could see in the last 6 months it's gotten all the way up to $8 at one point, but then continues to give back its gains. So the stock has really not moved a whole lot over the last 6 months. Over the last year, we can see that it's down huge, but that's because we're looking at post a year ago. That's when a lot of these tech companies and more speculative companies actually peaked out. So we can see SoFi kind of peaked out here around $23, $24. So here we have SoFi's earnings. They reported a loss of 8 cents per share versus expected of a loss of 7 cents. I've seen a varying number for what was actually expected, anywhere from like a loss of 7 cents to a loss of 10 cents. So depending on what you're looking at, that'll obviously either be a miss or a beat. But basically, in line with what analysts were expecting. Revenue, we had a good surprise here. So they were expecting $391 million, and they actually reported $419 million. So that was a surprise of 7%. So let's go ahead and jump into why SoFi rose up so sharply and then basically crashed back down. Obviously, it rose up on a lot of the positive guidance and things going forward. So management actually came out and rose guidance for next quarter, basically expecting the company, to outperform what analysts were originally expecting. And obviously that had a huge benefit on the stock. But there are things that basically are questionable for SoFi. It really comes down to the vision is what people are looking at for SoFi and wondering where the company is headed, and we'll jump into kind of what the company has going forward for it that could potentially also help the company, but in the short term is going to have some detrimental effects to their earnings and their balance sheet overall. One thing that we're really starting to see some results from for SoFi is that they recently acquired a bank charter. It was maybe a year ago, but we're really starting to see the potential that comes along with that, and they actually acquired that bank charter by acquiring a tiny Sacramento bank called Golden Pacific Bank Corp. And then basically what that allows them to do is have the ability to hold deposits on their balance sheet and then use those to fund loans. So that's going to be huge and continues to be huge for the business. And a big part of that is basically bringing their loan origination in-house, which is going to save a lot of money and time for customers, but also for SoFi, right? Because if they're able to save $1, for a customer, then of course they are going to reclaim a little portion of that towards profit. So overall, that is going to be a huge thing moving forward, is the bank charter and basically allowing them to act more as a bank than they did previously. What we have here is some discussion about what is concerning for SoFi and what could be concerning for SoFi in the short term. Basically what they're talking about, and I had to read this a couple times to fully understand it, so feel free to pause the video and read it for yourself. But basically right now, SoFi has a provision for credit losses of around $39.4 million. But SoFi has loans that are around $11.2 billion on their balance sheet. They're allowed to hold basically this small of a credit loss because they're only holding their loans currently for 6 months. But if they hold them till maturity, they have to increase their provision for credit loss significantly. So right now they're sitting around 0.35% or 1.4% annualized, and they would need to get that number up to around 5% to 6% if they were going to hold these loans all the way till maturity. And what that means is basically right now they have personal loans of around $6.8 billion, and just on those personal loans they would have to go up to $340 million of basically credit provisions. So again, that's just to maintain, if a loan goes bankrupt or someone defaults on their loan, they have to hold a certain percentage of that loan on their balance sheet. So right now, basically, they're holding a very small percentage because they're only holding these loans for 6 months, for a maximum of 6 months. But if they end up turning around and trying to basically run the business more towards, let's hold these loans till maturity, which will allow them to gain a little bit more profit off of these loans and other things, then they will have to hold, again, a lot more capital, a lot more money for credit losses. And that's where, investors are looking at this and saying they would have to take a lot of hits to earnings, basically stockpiling that cash into, those provisions for a rainy day in case anything happens. So again, that would be a potential downside with the stock in the short term, but over the long term, they would basically be able to gain more profit from their loans by holding them for longer periods of time. So with that question out there of whether they focus on longer term loans or shorter term loans, that is obviously bringing some uncertainty into the stock. And with investors, expecting different things, then obviously some investors are going to get out of the stock. And that's kind of what we've seen over the last few days. But there was a question posed to Anthony Noto, who's the CEO of SoFi, basically by an analyst asking if they were going to grow their balance sheet and try and hold longer term loans. And his response was, he is looking forward to a year in which we have continuity and stability across markets and across company specific initiatives. So basically saying that right now, the economy, macroeconomics don't really allow a lot of companies to focus a whole lot on growth in terms of, trying new initiatives, going out there and trying a lot of new things. And we've seen that across a lot of companies, right? We've seen that Google has cut certain aspects of their business, trying to focus a lot more on their core business and keeping their core business strong. Facebook is really Meta is really the only exception, where they are still continuing very hard, moving forward, focusing on their vision for the metaverse. But a lot of these companies are basically pulling back and focusing a lot more on their core business. And what's good, though, is he also said that the company expects to reinvest 70% of its incremental revenue back into the business, which means the company is still more focused on growth than profitability. So again, in my opinion, that's kind of a good thing, right? A company like SoFi is in a position where they want to continue to keep growing. They want to become the number one online bank basically in the world. And that's kind of a good vision to have moving forward and to stay committed to that vision, especially even though we're, getting into hard times. It's always easier to stay in growth mode than to go, from a profitable state and try and go back into growth mode. That's kind of what we've seen from Meta, and what's really hurt the stock price over the last year is that a lot of the investors were value investors, and Meta has kind of taken a stance of, we are focused on growth now. And a lot of, those value investors don't like that. They want to see continued profitability. They want to see stability in the business. So this seems like a smart thing, right? If they tried to focus on profitability, you might get a lot of value investors. And then if they try and transition back to growth, then that could really hurt the business. So overall, I think both those statements are kind of positive. Let's try and weather the storm for the short term while continuing to focus on our long-term vision. So to close out the video, I wanted to give my opinion on SoFi and where I see it heading in the future. So SoFi has had a very cyclical nature kind of in its past. And I think a lot of investors who probably got out over the last day or so, I think they probably bought into the stock around $6, have kind of gained some fear in the market and wanted to get out of the market. And they probably saw, earnings spike up, saw it get above $6 and probably ran to, sell out of their shares. I personally don't think there's a lot of institutional investors yet in SoFi. I think SoFi has a lot of potential in the future to gain institutional investors, or even better yet, potentially get a buyout from a lot of, from either a larger bank or maybe even someone like Berkshire Hathaway. Berkshire Hathaway, Warren Buffett had been a strong proponent for banks. And obviously if SoFi, kind of runs that line of being a bank plus being on the cutting edge of, technology, I think potentially, Berkshire could look at it as an acquisition target, because they did the same thing with, Aflac being an insurance company. They brought it into their ecosystem and use it kind of as a cash cow to continue to hold cash on the sidelines. And I could see, SoFi being something similar where they might try and bring it into their ecosystem. They love banking stocks all around. And again, this is kind of a new growth type of bank. So obviously that would be a number of years down the line where I think SoFi would need to establish its business a lot more for Berkshire to be very interested in it. But a lot of those same, similar principles that go along with insurance go along with banking, risk, holding cash on the balance sheet, everything like that. So that would be a very interesting acquisition, and that would obviously send the stock soaring if anything like that was announced. But other thing that I'm kind of looking for is, we've seen a lot of these investors getting out, a lot of big institutional investors that actually originally IPO'd with SoFi. They kind of have waited for the stock to run up to this $20 mark, $22 mark, and then they would actually sell out of their shares and basically liquidate some of their position. And then the stock would go back down to this $15 mark. And we saw that, happen 3 times, right? It happened here during IPO, and then it happened again, and then happened a third time. And then ever since that third time, obviously there's been a lot more market weakness. So I'm kind of looking for SoFi to actually get back into this range of, $15 to $20. I think eventually it will get back up there. I think obviously there's just a lot of hard times in the market right now. So again, nothing really crazy from these earnings. I like the continued growth perspective. I think they need to keep focusing on that into the future. And I think that overall in turn will help the business. So again, I'm still bullish on SoFi. I still own all my shares. I run the wheel on a lot of my shares because SoFi is a very cheap stock. It's easy for a lot of beginner investors. If you haven't ran the wheel before, all you need is $500 to $600, and you can basically run the wheel on SoFi, which is pretty cool and pretty fun to collect $10 to $20 a week just running the wheel on it. So if you're interested in seeing some of that, go check out some of my options trading videos. I posted one yesterday, and then there's a couple more before that where I traded the wheel on SoFi. So if you're interested in checking that out, let me know. I could also make a dedicated video to it. Maybe I'll do that next Saturday. That would be pretty interesting. So I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.